Hey, it's Nick with Us versus Herd. I want to go over why trading options is way harder than just buying or investing in stocks or trading stocks. And I'm going to show you a couple examples, couple different accounts here. Just kind of go over some options besides the obvious that it's more complicated. Yes, trading options is more complicated. Yes, it does set the bar higher. Yes, you do get greater returns on options. You can get faster returns on options, but it is harder. So, like I say, anything worthwhile, it's gonna be harder here. So I'm just gonna show you one of my accounts here. So we got Robinhood here. I'm up about 50% this year on it. I mostly just trade stocks on this and hold stocks. I don't really use it that often for options. I do trade options on here every once in a while. Like I got some Goldman Sachs calls right now. But for trading stocks, as you know, you can only buy or sell or short stocks. And like Warren Buffett says, the longer that you hold on to an investment, the less risky it gets. And trading stocks, that's what you're doing. So you're buying, you're holding for a long period of time or a short period of time. I'm not talking about penny stocks here. I'm not comparing them to penny stocks. Penny stocks are trash. If you're going to trade penny, you're better off trading options and risking your money that way. So what I'm looking at here is on Twitter, if you're buying and hold Twitter, my average cost down here is $19. We're up 128%. Square, as you can see, average cost here is $33. We're up 110%. And when you're buying and investing, it's less risky. If you're new to trading, definitely it's a good way to go just to get some experience. Just try to buy some shares, hold on. Obviously, there's a lot more to it. Like, what's a good value? Is Twitter a good value here? I don't think so personally. Snapchat, it's kind of hard to say. This is pretty much my only one negative on the list. My average is 16. Probably should have averaged in more when it hit 10. It's at 13 right now. But I'm just going to kind of let it go. But the main driving forces behind options, what makes it more difficult is that stocks you can hold, and if it goes against you, you can just hold that for a long period of time and eventually it'll come around. Options, it's a lot harder because you have to get the timing right and you have to get the movement right. And this goes for both buying options and also being a premium seller. I know they teach you, a lot of other places say, hey, if you're selling premium, you don't even have to be right on the direction, or you don't even have to be right. You could have the neutral position, but if you're selling premium, that those can go against you, and you only have so much time. If a position on an option goes against you, it's a lot more scary because you don't have the same amount of time. It expires. So options expire, and you're going to either expire at making money or losing money. You have to decide that when you enter the trade on what risk you want to take. And I just want to kind of show you some of those risks in trading options here. I will look at Netflix. Oops. Netflix is a good example here because they had earnings the other day, and as you see this right here, and let's look at this $400 call. So I had one. I sold some the other day for 300% profit, and I had one left here. I just want to kind of show you that now it's only worth 5 cents because time is working against me. So a couple days ago, I actually sold this one for $395, and I still have one left, and it's worth 5 cents now. So pretty much, worthless on that. But let me just show you some price action here on the options and why they're risky, because this one is expiring tomorrow, so that's why these are worth not a whole lot of money here. You can sell it for $3 and whatever. But let's go to show you the chart, the 5-day chart on. Now this is the 15-minute chart. Let's see if we can. Okay, so let's kind of take a look at this option. So this is the chart for an actual option. If you didn't know you can do this, you could actually do this on Robinhood as well. It'll show you the pricing. Not as great, but it'll show you how the option pricing are. So when you're trading stocks, you're just worried about what that stock price is. When you're trading options, there's a lot more to it. You're worried about what the stock price does, or what you call as the underlying. So Netflix would be the underlying. But there's also a lot of other things, such as the Greeks working against you, such as time, theta, and implied volatility, which I will show you implied volatility in a second here. But this option here, this is the $400 call. We just did you know, this is going back to April, and you can kind of see how you can make money here and how it's easy to lose money here, and that if buying and holding options isn't a good strategy because you don't have that much time. Unless you're a premium seller in this scenario, even if let's say you were selling puts on that, you know, you'd be in the money because it had such a big movement. You know, it depends, but we're not going to be diving too much into that. Just going to try to keep it simple for you here. So as you can see, the price was pretty flat. This is the price. This is the 400 call, expires tomorrow, actually Friday. And then they had earnings, and they had Netflix. Let's try to pull up Netflix here so we can kind of correlate the pricing. So Netflix, as you know, it had a nice ramp up here, up into earnings, and then, you know, we had earnings, and now we're down at 367. Kind of going back here, you know, as this kind of reflects that as well. But obviously, when you have the option, you're controlling 100 shares, so that's why it's, you know, the price of this is so crazy. So it went from $5 and some change all up to $38, and now 7 cents. So I mean, if you bought up here and you're still holding, with it expiring tomorrow, I mean, you just lost a whole lot of money. You know, it went from 27. So not only did Theta eat it, but implied volatility crushed it. You know, on the day that I did an example on this one, I made 300% on trading options on Netflix the other day. I'll include the link to that video below, actually. But you can see here one of the examples on the day of earnings when they came out. You know, the stock dropped, but then you have this huge swing, went from $5 to 25 cents, and that's because the stock didn't move, but the implied volatility changed and just crushed the option pricing. So this is why it's actually a lot more risky to trade options if you don't know what you're doing. You know, just trade slow. The pros though is that you can make a lot of money faster. So as you can see here, and it will cost you a lot less. So for this. Right here, so let's say on 6/12, let's see, what was the price of Netflix on 6/12? Okay, so the price of Netflix on 6/12 was $3.65. So let's get the calculator here. So we'll just round it to $3.65. Now, one option equals 100 shares. So to make it 1 for 1, you 365 times 100. So let's say if you were just investing, buying shares, it would cost you $36,500 to have the same movement, for you to make the same amount of money. And when you buy the option, it would have cost you $5, but since it's worth 100 shares, it's cost you $500 and to make the same amount of money. So you would have spent $500 or invested $500, and you could have made up to $3,800. So you do 38 times 100, and that's 3,800. So to make the same amount of moves, same amount of money, you know, it would cost you $36,500 here. And that's how much you would have to risk. However, when you're buying stock, you know, the likelihood that the stock is going to go to zero, it's not likely at all. So if you bought it up there, what was that, 365? It was 612, I said. So if you bought it at 365, it went up to 423. You didn't sell. You're at 367. You know, you're still up $1 or $2 from that point, and you can still hold that stock. Yes, you're holding on to $36,000 worth of stock, and a lot of people don't have that kind of money. But you're willing to invest that into Netflix if you're making that investment. In this scenario, you risked $500. You could have made $300, but if you didn't sell, now instead of keeping your money, it's now worthless. It's worth $5 cents. It's worth $5. So it went from, if you bought it here at $5. You didn't sell, you still hold it, now you lost all $500 and it expires tomorrow. It will expire worthless. You'll get nothing for that. So just want to show you kind of how option pricing works here versus buying and selling stock. Yes, it's lower amount of capital, but it's higher risk, especially with time. So when you're trading options like that, you don't have the time. So that's why it's better if you're just buying and selling. Meet your targets, get in, get out. Versus buying stock, you have the time. You know, if you want to if you still think it's going to go up, let's say you're hoping for a big earnings play, you didn't sell it, it ramped up, and then now it's down here, and you didn't lose any money. Yes, it could have went lower, but let's say it went down to 300, and you had the 100 shares, so 100 times 300. So yeah, you would have lost, $5-6 grand. So it depends on what your risk profile is there. But when you're buying and selling, or you're looking for like a long-term investment, stocks is a lot less risky because you can buy it and you can just hold on to it. You can add to it. It doesn't expire unless, let's say, the business goes out of business. That's why it's really risky to trade penny stocks. But options, way more risky. You have to get the time right. It's a lot more fun. I personally like trading options better than stocks, but I do have a lot of long-term holds. As you can see, I have a lot of other accounts that I trade or invest in stocks and just hold them for long periods of time. And then I have other accounts where I just trade options exclusively. And those are just, maybe I'll sell premium and hold it on for a month or 2 weeks, or some of them will just, quick flip for the day. I bought something cheap, it went up, triple my money, or went up 100%, and I sell it. So when you're selling stocks, like to make this kind of money in Twitter, it cost to make 100% on Twitter, I had to add to this position. I was adding this in 2017. It's now a year later. It's now up 127%. When in options, you can make 127% in a few minutes, an hour, a day. But the risk is a lot more. So it depends on your goals. You can definitely trade any way that you want. You can trade any risk profile that you want. Some people are more risky, some people are less risky. It really depends on your personality and what you want to do. But just want to highlight some of those risks. Hope that can help you out with making some better decisions trading. Yes, you can make a lot of money investing in stocks. Yes, you can make a lot of money investing in options, but some people aren't good at all of those. So you just got to pick what you're good at and move with that and go with it.